In this video, we're going to talk about using the CCI to better time your support and resistance fade trades. Stay tuned. Hey traders, a very warm welcome to you. Okay, so we're pretty familiar, I guess, with the concept of support and resistance. If you're not, by the way, that's fine. Go to previous videos by me and other guys on this channel and check it out. We talk about support and resistance, how it all works, and kind of strategies you can develop around it. But the concept generally is that, hey, if we've got support here, we come down, we hit it again, we're looking to buy for a move back off it. That's pretty much where we are. So this example here, we've got support here, and we've got another test of it here. Now, why have I picked that specifically? Let me scroll back and show you. Let's put it into some context. The context is here we're in an uptrend. We've pushed up. By the way, guys, we're on US dollar CAD 15-minute chart. Uptrend, cluster of kind of support here. Then later on the next day, we come down to test it, and then we move off again. Right, so that would be something that you're looking to trade because it's kind of an uptrend. It's come down, it's tested it, you're kind of looking to buy that pullback, looking to buy that support in the uptrend for a blast to the upside. So let's have a look and see exactly kind of what's happened here. So traditionally we would do that, we'd be buying on this level here, and this I'm going to show some other examples as well, so don't worry, look at some wider ones, but I just wanted to put this into the context of what this strategy is. The added kind of bonus with this, if you like, is the CCI. So we use the CCI, we've got a standard 20 period setting. We can play around with that, we can use it on a 14, you know, 14 is quite common as well. It doesn't really matter, but 20 period seems to be your kind of standard stuff. Each package is different. And again, there's no holy grail for this, guys. Someone comes along and says, oh, no, it's got to be 20, it's got to be 19. You know, forget about that. Trading's never that black and white. You're going to have to adapt it and adjust it. Use the standard settings and then tweak it depending on volatility or how you get on with it. So the point is, if we're coming down to support, we have to double check the trade's okay by looking at our CCI indicator oscillator down below. If that's in the oversold region, in other words, if it's below 100, we're good to go. We're good to go long. If it's not, we have to wait. We have to hang back on the trade. And if you look at something like Australian dollar, for example, plenty of times of buying support, you know, selling resistance, that kind of stuff. Bit of a wider range here, bit of an idea of kind of what's gone on. Comes down, test support, retest support, double check my CCI is oversold. Yes, it is. We're well in the hundreds, we're in 200s. Yes, I can go long. I can put my stop below the low. I can wait before the CCI turns back up to trigger the entry. Or even better, I can say, hey, you know what? I'm going to wait for a bullish candlestick pattern. In other words, I'm going to look for a tail to the downside. I'm going to look for you know, a big kind of engulfing candle, anything like that. Again, go and check out some videos if you want to learn more about candlestick patterns, that kind of thing. So I've also got three triggers. I've got my support and resistance, which is a classical price action trade. I've got my CCI, which I'm going to look for an oversold or an overbought condition. So I'm only going short in an oversold condition. I'm only going long in another way around, sorry. I'm only going short in an overbought condition. I'm only going long in an oversold condition. You get the idea, guys. Then you've got the final trigger, or the final kind of criteria, if you like, is a candlestick pattern. So you're going to have your hanging man, your hammers, your engulfing, your kind of tails that break through and fake out. It just adds an extra layer on, you know, and very often, of course, you're going to get overbought and oversold conditions. But the point is, it's just going to allow you to wait. If something's not quite right, and I would say you could substitute this with an RSI, a stochastic as well if you wanted. They're all very, very similar, slightly different, but all very similar in what they're trying to achieve. 15-minute chart is a great way to do it. Daily as well if you fancy that. But the higher time frames are probably better than the lower ones. But the point is, guys, you're just adding something else to stop you taking those average trades. You know, if it's sitting in no man's land and it's at support and resistance, maybe don't take it. Maybe it hasn't stretched enough for you to get that extension, that sort of pullback that you want. You know, maybe it's just worth waiting for that sweet spot when you get the overbought and you get the high push and you get the fake out. You know, adding those layers of edge. 1, 2, 3. Take it. Quantify your risk. You know where your risk is going to be. Wait for perhaps the CCI to come back through zero or to go to overbought. Take the trade out. Plenty of ways to kind of manage that fit in with your your personal trading strategy and the way you approach it. In the comments below, guys, let me know if you use a CCI or in a different way. Obviously, that's just one way of using it. Who kind of bolted it into a support and resistance strategy there. There are other ways, and I'm going to cover those in some future videos as well. They may be up already. Go and check them out if they haven't, or wait. And if you're interested in that, hit the subscribe button and notification bell, and then videos will be alerted to you as they come and get uploaded from me and other guys on the channel. Usual thing, guys. Good trading. Keep the risk managed. Most important. Take care. See you in the next one. Bye bye.